Greetings and good day. I hope you're doing great. I'm here with the daily analysis of the Euro-USD currency pair on April 27th. Last week, we saw this pair's price, after a 1% fluctuation, finally close with a doji candle at the 1.1717 range. Starting this week, the price began.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Trading with a downward gap, and now, with about a 0.5% growth, it's at the 1.1744 range. We're currently examining the daily time frame. Here we can see that at the start of last week, with the dollar weakening, we saw an upward movement in this currency pair. But then, for 3 consecutive days, the US dollar gained strength, causing this downward movement to take shape. On the last trading day of last week, as oil prices fell, the dollar also weakened. And now, starting this week, the dollar is in a weaker position relative to the euro. We're currently reviewing the economic calendar. As you can see, on this trading day, there won't be any major reports for the dollar or euro. As for this week's key events, on Tuesday, we'll see the April consumer confidence data, and then the Federal Reserve's interest rate decision and statement will be announced on Wednesday. Also, on Thursday, the U.S. gross domestic product data for the first quarter of 2026 will be released. We're examining currency strength on a daily basis. As you can see, today, in the past hour, the dollar's strength has dropped sharply and it's trading as the market's weakest currency. Meanwhile, the euro is trading in a better position in terms of strength compared to the dollar. We're currently looking at the 4-hour time frame. Here we can see that in the drop we saw in this pair's price on Thursday, the price fell to the 4-hour FVG range and immediately moved up after filling this area. Thus, the previous bottom area is the most important support range for this pair's price. And today, after opening with a downward gap, the price quickly filled this new week's opening gap and continued its upward movement. We're examining the 1-hour time frame, and here we can witness the powerful upward movement of this currency pair. In the past hour, with the dollar's weakening continuing, this upward move has persisted, and for entering trades, we'll consider the dominant bias to be bullish. If, after reaching a new high, the price enters a brief and temporary correction, we'll carefully try to follow the price until it eventually reaches internal liquidity zones, and if we see a liquidity sweep, we'll enter a buy position. Good luck and be profitable.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.